Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Linn and Associates with your metals market update for this wild trading week. And this is Friday, the 11th of August, 2017. And we're right now about 3:18 p.m. Central Daylight Time. By the way, these will be the closing prices for the stock indices. Gold actually closed a couple of dollars lower towards $12.94, but it's still advancing into late trade, and that's a pretty interesting move. And the big question, of course, in gold is going to be $1,300. Can it get up and through that? And there's a level up there around 1308 to 10 that's going to be the next telling point. But over the weekend, you're certainly getting what we call a bid into the weekend. You got the gold going up. The Swiss franc got a bid as well. The Japanese yen, bonds, notes. They're called safe havens. So you have a safe haven bid. Not that the market's necessarily going to not give back some of this on Monday. This is the what if the war of words picks up over the weekend or further action, and that has traders scared, and rightly so. When we take a look at a monthly chart of gold, you know, back in June I wrote an analysis based on the monthly chart. And I think you'd have to give the report a lot of credit. The market is held. It's trying to reach up. And even what I said then is very valid, how the market's got its resistance up at the upper Bollinger Band, the 100-day average. And the question is, can the market clear these past two highs, which it hasn't yet done. There's been very little downside. And when I first wrote the report, I had calls from people, boy, look at how wrong you got the report, Ira. It dropped on you right after you wrote it. I won't get those calls, Ira. Look at how much the market has come up since you wrote the report. I get that. When we look at a weekly area chart of closes, bullish. The market has gone from 1209.70 now to 1290.20. And remember, this would be for the August contract. It's a weekly area chart, which is continuation. That's why the December number is a bit higher. When we go to a weekly bar chart, do you see this resistance area? That's what I'm pointing out to everybody, folks. Very important that you understand that you're coming into a key resistance area. And if you can get through that area, if you think that the range is 1295 to, let's call it 1205, what you do as a chartist is you flip it over. And that would put you into the 1380 area longer term. If you can clear it, ideally for more than a week, but just giving you a point. When you take a look at gold on the swing lines, this is real important. It's the first time I've had this in a while. You've got higher lows, higher highs. It also means that when I look at the chart and I look at 1251.40 on the weekly chart, that is the number. If you're going to hold this market and try to get it to really do something, it cannot take out. If it does, this will be called a bull trap, and then the market might sink and it might go back to the 100-day average because it would already be under the 18-week average of closes. And that's going to be important. What about upside resistance? Well, if you look at the upper Bollinger Band, it's probably going to climb with the math the way it works for Sunday night, but it's going to be in that 1303, 1304 area. So that's going to tie in right with these other numbers. And you can see what happened the last time you got up to the Bollinger Band. You got near it here and you fell back each time. This is a real important area, and if you think not, great. I think it is. Momentum pointing up. So you've got the trend up, higher lows, higher highs. You got the bias up because you're over the 18-week average. Momentum's up, 1301.40, a very important number, about $10 higher on the weekly chart. In the silver market, another important week. The market's now got a pattern of higher lows, higher highs. The settlement is over the 18-week moving average of closes. This is called a kiss. It's when the 18-week and the 100-week come together and they get right by each other. Now the question is, do they turn apart or does the 18-week start coming down under the 100? It's going to be very important on the moving averages. Momentum pointing up. All I can say is this is still bullish. If the market wants to go for upside momentum. It could reach to the 1820s. Copper market. We now have a series of weeks over the upper Bollinger Band, like a daily chart. Once you get up past 4 or 5, you're into no man's land. So the odds of this market staying up, and we can come back a little bit here. We know we're up this week. We were up last week. We were up the week before. So that was 3 of them. If we look at this week, we had closed at 271.50 and the upper Bollinger Band was 270.246. Therefore, we have 3 weeks in a row. That means the odds of this market closing over the upper Bollinger Band, as a rule of thumb, the way that I teach it, is 2%, 98% that it won't do it. So be cautious. I teach you don't buy over upper Bollinger Bands, but what I teach doesn't matter. I'm not telling you to follow what I do or don't. Momentum, still up. Correction might be in the cards here. In the platinum market, you have an uptrend that has hit an objective. First of all, momentum soaring to the upside. I think you see that. Higher lows, higher highs. You went to the upper Bollinger Band and you've run into a brick wall against it. So that's very, very important. And now you have to wait and see what the market does. Obviously, any further bad news or scary news out of the U.S., North Korea is going to kick the market higher. This is not an inflation play. If you looked at the CPI that came out today, it is not there. Wage inflation isn't there. We don't have the inflation scenarios. The odds of a September rate hike are under 4% at this point. And for December, flip a coin. It can go either way. You have a lot more data to come in before December, so there's time for that. And I think it should stay about a 50-50 bet. We've also got Jackson Hole, and we'll hear about that coming up, and that will impact the metals as to how, let's call it hawkish, we hear Ms. Yellen and other central bankers sound. In the palladium market, up and away, momentum, price, higher lows, higher highs, running for the upper Bollinger Band. So other than the copper, which is really overextended, the other metals aren't like that. And in the dollar index, even with the rallies we had and everything, you're down again for the week. So you've had that continuation of lower highs, lower lows, momentum locked into a bearish mode. And if this was the correction in the dollar, be careful. You could be headed back to that 9,200, the lower part of that Bollinger Band. So when you put it all together, a pretty interesting time. They're going to reopen now all this, and we'll see what's going to happen. Let's talk about Modern Trader magazine, because I love the magazine. I do not get paid to hawk it. I'm the only person I know that they'll allow, because I've been reading it so long, I'm able to promote it for them and give you something for it. I get nothing out of it. $79 subscription. If you go to their website, come to me to get it. You get it for free. 12 issues. Daily, you're going to get what they call their market focus, and the daily is the daily stories that you have to pay attention to, what's moving the market. When they put the magazine together, and for you stock guys, this is all about the steakhouses, it's all about the meat, it's all about the ETFs. For you futures traders, it's about cattle, cocoa, soybeans. They cover there. Then the cycles that you're going to talk about in markets. Very important as you understand them. And that's going to be key to these markets. The stories are great. Here, strangles provide sizable yield. How do you play with it? And that's on gold prices, my friend. What about trading the locomotive breakout? Very important on a study. I never heard of this one. Away you go. So you learn from it. How do you get all this? You call me. 866-973-2077. My brokers are here. If we're not, leave your name and number. You can always go to our website. You'll see a carousel of free offers. You can click up here at any time. If you're watching me on YouTube, you'll see this icon. Away you go. And underneath us, it says, click here for Ira's free offers. Click that and the form will appear. I'm Ira Epstein. It was an exciting week. I'm sure it's going to be a wild one next week. I'll see you all on Monday. Remember, if you want me to cover certain charts, ETFs, give me a call. As long as they pertain in this section to the metals, I'll try to get them in for you. You have a good day.